Good early morning, everyone. T-Speaker 222 XRP Future Millionaire with the side bet on X11 Future Digibyte OG. So, guys, I want to thank you for tuning into the overnight radio show. This is day 7 of the overnight radio show, so the end of our first week. This is part 3 of 4 of the Wyckoff Schematics. So, as you know, we went through page 1. Went through here, went through distribution. Yesterday we covered this page. Today we're going to do it one page at a time so that they're not as long. I'm going to keep these a little bit shorter. So we went through 1, 2. Yesterday we went through here. Today we're going to go through here, and then tomorrow we'll end it. So let's get right into it, guys. So phase E. In phase E, the stock or commodity leaves the trading range and supply is in control. Let's make this bigger so you guys can see this side. We'll make it smaller when we go. Rallies are usually feeble. Having taken our positions, we must monitor the stock's progress as it works out its force of distribution. Successful understanding and analysis of a trading range enables traders to identify special trading opportunities with potentially very favorable reward sets, which parameters, which analyzing a trading range, we are first seeking to uncover what the law of supply and demand is revealing to us. However, when individual movements, rallies, or reactions are not revealing with respect to supply and demand, it is important to remember the law of effort versus result. By comparing rallies and reactions within the trading range to each other in terms of spread, volume, velocity, and price, additional clues may be given as the stock strength, position, and probable course. It will also be useful to employ the law of cause and effect within the So, however, when individual movements, rallies, or reactions are not revealing with the supply and demand, it is important to remember the law of effort versus effect by comparing. So it'll be useful to employ the law of cause and effect within the dynamics of trading range. The force of accumulation or distribution gives us the cause and the potential opportunity for substantial trading profits. It will also give us the ability with the use of point and figure charts to project the extent of the eventual move out of the trading range and help us to determine if those trading opportunities favorably meet or exceed our reward risk parameters. The ice story. I love these. So the ice story. We imagine the market in the person of a Boy Scout walking over a frozen river. In the midst of winter, if the ice is strong, the river covered with ice has no difficulty in supporting the weight of the Boy Scout. That support is seen as a wiggly line connecting the lows, the supports, and its trading range. A failure by the Boy Scout to reach the upper resistance level of the trading range would be a warning of potential weakness. Weakness of the ice would be signaled by the Boy Scout breaking support or falling through the ice. The Boy Scout has 2 chances to get back above the ice, i.e. creating a bullish spring situation on the first upward rally. The Boy Scout may fail to regain a footing above the ice. If so, then he will sink lower into the river in order to gather strength to try and rally once and crack the ice. If on the second attempt the Boy Scout again fails to penetrate above the ice, he would be most likely to sink downward and drown, i.e. a bear market / markdown phase would occur. By the way, one of my biggest fears, and pretty much why I don't go ice fishing, is because I'm afraid to drown under the ice. Not afraid to drown in the water, but afraid to be under the ice, and I'm like banging the ice like, fuck me, I'm about to die because I can't break the motherfucking ice to get back over. You know? So anyhow. 2. Wyckoff Schematics applied to charts of Nokia. I'm a very strong swimmer. Very strong swimmer. My dad used to tell me I should apply for the Coast Guard or something because I'm a very strong swimmer. Weekly charts of Nokia display the overall cyclic progress of Nokia, but obviously my eyes, I can't do it. Remember, I can only see out of one eye. Markup to distribution, to decline to accumulation, and finally to the commencement of a markup phase. Schematic number 4 provides a visual conceptual scheme depicting these 4 phases of the market action. So schematic for conception of primary market phases, you've got first you start with accumulation, reaccumulation, and then you got the markup underneath. Distribution, markdown, redistribution. Accumulation, the establishment of investment or speculative position by professional interest in anticipation of an advance in price. Markup distribution, or markup, a sustained upward price movement. Distribution, the elimination of a long position or speculative position. Markdown, a sustained downward price movement. So, that's very interesting stuff. So weekly charts of Nokia suffice as an application of conception of primary market phases. The weekly charts also furnish a bigger picture backdrop for a detailed application of schematics 2, 3, and then 1 for distribution and then accumulation. The jump across the creek and ice analogies will be used to help explain the important junctures of distribution and accumulation illustrated on the daily charts of Nokia. See sidebar number 2, figures 2 and 4. So Nokia 2, figures 2 and 4. So we're not going to go down to 4. But we can see the Nokia chart right here, number 2. The first one showing resistance and support. So, alright. Nokia's bull market advance was stopped during the year 2000 around the 500 level by the entry into the market of a dominant force of supply. This force of supply first appeared around March 2000, where it created a sharp sell-off to the vicinity of 350 on the Nokia chart. The man that came to the market to staunch this sell-off marked the point at which the ice story commenced. See schematics 2. We can see the support occurring at points 1, 2, 3, and 4. So 1, 2, 3, and 4. Absolutely, you can see it. And it looks like we get a breakdown of support. So then we end up moving into a bear market after, it looks like. So the rallies from these support levels were becoming increasingly feeble, as witnessed by the progressive levels or diminution in volume, coupled with the halting of the price advances at a resistance level near 540. Then from point 4, there was a rally that failed to reach the horizontal resistance line. Here the volume shrank appreciably. Moreover, the price level stopped in July near the same 500 level as did the earlier preliminary supply PSY in March/April. Hence, the juncture is annotated as a last point of supply for the possible completion of a line of important distribution. The failure to reach the upper resistance level was a warning of potential weakness, indeed a sign of weakness ensured on the next sell-off. It is here that we witness support breaking around the 425 level in August 2000. Note the extremely wide price spread and the enormous increase in volume as the Nokia plunged through the meandering support line drawn across previous lows. So if we're looking at this, you got the first one, you got support, and then it shows the ice. So you can see all through this. And then the second one is Nokia chart 2. So basically it's this is what it's telling you is going to happen. And then if you look through it, you can see it goes all the way from April, all the way out to from 2000 in April of 2000, just after December of 2001, it looks like. So the significance of the price breaks below the support levels of this trading range in Nokia will be confirmed by the subsequent test. In the ice analogy, the Boy Scout has 2 chances to get back above the ice, i.e. creating a bullish spring situation, as can be seen on the Nokia chart number 2. There were 2 such rallies. The first attempt stopped at, what the fuck was LPSY? Motherfucker. Told you guys it's important. Try to remember all of the words. LPSY. So last point of supply. Okay, so now let's go back down here. So the first attempt stopped at the last point of supply, while the second attempt was halted at about the same level point of supply and last point of supply. It can also be seen that the ice, which had provided support, has now reversed roll and is acting as resistance against attempt to move higher. These latter LPYs, we're going to call them, for just 2 and 3, also expand the possible extent of this distribution supply pattern, thus generating the potential for a greater descent in price. Nokia ultimately declined to under 100 in year 2004. So yeah, it's pretty obvious we were descending. And you know what? I want to drag this out one more night because I really have fun with the Wyckoff. So I hope you guys enjoyed this part of the Wyckoff schematics. We'll end one more so you can see the difference right now from the time of recording to the time you woke up. I'm going to go over the crypto market real quick and just tell you the prices. So at the time of recording at 10:50 p.m. Eastern Standard Time, even though you're watching this at 3:42 a.m. Eastern Standard Time, Sunday morning, at the time of recording, Matic was up 0.43% to $1.36, but that doesn't tell the story. Stratus is down another 1.72% to $1.13. Iota's down to 95 cents, falling another 1.3% so far. Algo's down just over 0.75% to 92.69. Bitcoin's down 0.20 to 35,416. Doge is down 1.33% to 28.2. XRP's down another 1.7% and barely hanging on at 74.53. XLM's down 1.08% and once again is under 30 cents to 28.6. DGB's under 5 cents again, but it's up 0.04% and ready to drop, 0.04916. VeChain's down 0.05% to 9595. Zill also is under 10 cents and 0.092, down 0.70%. XDZ's dropped 2.33% back down to 7 cents. HBAR is down 2.08% to 19.1. Litecoin's down 0.3% all the way down to $151 and falling. AMP's up 4.83%, but I would expect that to drop very quickly here down to 0.091. DAI up 0.61% to $20.12. Stores down 0.40% to 82 cents. Theta is down 3.62% to $8.73. Shiba and U's up 0.13% to 0.0000763. Solana's down 1.21% to $34.77. And Quant's up 1.43% to $73.94. So, T-Speaker 222 XRP Future Millionaire at the side by the XM and Future Digibot OG. I want to thank each and every one of you for tuning into the overnight radio show. We'll end the Wyckoff schematics tomorrow. That will be part 4 of 4. But if you guys are still interested, we will continue uncovering the Wyckoff. There's much more I can do, and I can make this into like a 30-part series if I wanted to. So stay true, stay blessed. And if you want to see the conclusion of the Wyckoff schematics, just leave in chat that you're interested in seeing the rest. I don't care if it's just 100 of you guys and gals watching. As long as you show interest, I'll continue to show it on the overnight radio show. So again, guys, 7 days a week, Monday through Sunday, 3:42 a.m. I look forward to seeing you guys tomorrow morning, 3:42 a.m. If you're going to bed, sweet dreams. If you're on your way to an early morning Sunday morning work, if you've got something for the family, happy Father's Day to all the fathers out there. And be safe, everybody, please. And in the chat, I would love to see you guys in the comments type hashtag be better, do better. Stay true, stay blessed.